We have placed all microphones on mute. Post the presentation, we will welcome questions. These questions can be typed in the Q&A panel available to you, which will be read out to the management on completion of the presentation. A gentle reminder to kindly identify your organization and name while posting questions. I would now like to invite Mr. Satyen Shah from Edelweiss Financial Services Limited to initiate the proceedings. Over to you, sir.
Hey, thank you. Good afternoon, ladies and gentlemen, and a very warm welcome to all of you on the for the broker and analyst meet of Tarsons Product Limited. Firstly, I'd like to thank all of you on behalf of the company and the lead managers for taking your precious time out to attend this meet. In a market, which would have otherwise been dominated, which has otherwise been dominated by global players, it's been very heartening to see an Indian company, which started with humble beginnings, way back in mid 80s, to gradually emerge as a market leader, in the Indian labware market and becoming a trusted partner for a varied segment of customers, across the pharmaceutical and diagnostic company chain. And I think kudos to that for the management for getting the company where they are today. From a company perspective, Tarsons is a leading Indian labware company engaged in the designing, development, manufacturing, and marketing of consumables and reusables, including benchtop equipment. It is amongst the top 3 labware manufacturing companies in India, with a market share of 9 to 12% in the labware market in the year 2020. The company operates through 5 manufacturing facilities located in West Bengal, which are vertically integrated and equipped with automated support systems that help maintain quality, increase productivity, and reduce costs. The management team, under the leadership of Sanjeev Sehgal and Rohan Sehgal, have built a very strong foundation. The company today boasts of a diversified product portfolio with 1,700 plus SKUs across 300 products, not just as a strong market share in India, but is also one of the few players in India to have global reach, supplying products to over 40 countries. Company has strong, long-standing customer relationships, and its key customer base includes across research organizations, academia, institutes, pharmaceutical companies, contract research organizations, diagnostic companies, and hospitals. Company has some very, very strong financial profile with more than 70% gross margins and around 30% PAT margins. Superior return ratios, which have been more than 30% both on ROC and ROE front. They've got a very able partner, an ADV partner, who has been, strong allies to the company and have helped in taking the company forward to the next level. With significant experience in the labware industry, designed to deliver capabilities, strong brand recognition, long-standing customer relationships, and support from the ADV team, we believe that Tarsons will be a key beneficiary in the times to come, especially when the investments towards advanced research is significantly increasing. In fact, we believe that this issue opens up a different dimension for investors who are looking to play healthcare sector in India. A sector which was largely restricted only to hospitals, pharmaceutical and diagnostic chains. This is a very interesting opportunity within the healthcare space. With respect to some issue highlights, the IPO opens for subscription on Monday, 15th of November, closes on Wednesday, November 17th, and the anchor is scheduled for this Friday, which is the 12th of November. The IPO consists of a fresh issue of up to 150 crores and an offer for sale of up to 874 crores at the upper end of the price band. The price band for the issue is between INR 635 and INR 662, which results in an issue size of INR 1023 crores at the upper end. With this, I'd like to seek your support to make this issue a successful one, and I'd like to invite the management to share their vision and take us through the presentation. Thank you so much.
Thank you, sir. Thank you so much, sir. Thank you so much, sir. I would now like to call upon the management of Tarsons Products Limited to take us through the company, its journey, and the investor presentation. Over to you, Rohan, sir.
Good evening, everybody, and thank you for your time today. So I will start with the presentation. Next slide, please. Next slide, please. Next slide, please. So this is a brief overview of the company. I think Satyan has given a very, very good brief overview of the company. I would just like to highlight out here some of the key financials from our last financial year in FY21 and some key customers spread across customer segments and certain key international customers on the bottom. Next slide, please. So this is the major events and milestones of the company. We started the company in 1983. It was started at that time by Sanjeev Sehgal, who's the founder, chairman, and managing director of the company. He has been involved with the company ever since, and today looks after new projects and manufacturing areas of the company. Prior to starting Tarsons, he was a part of the family business since 1977, which manufactured rollers and pinions for the mechanical heater industry. The technology shifted to electronic heaters, and the family was, out of business. The technology was made redundant. That's how Tarsons began. Sanjeev met one of his researcher friends who showed him an Eppendorf microtube. The idea of Tarsons was conceived, and Tarsons was founded. The beginning was very, very difficult. It was like moving against the wind. There was a lot of struggle over a period of 12 to 15 years because the addressable market was too small. There were technology barriers to build products at par with global multinational standards, and the Indian scientific research community was not accepting did not accept indigenous Indian brands. They were more focused to buy from European American brands and some Japanese brands. The first big breakthrough for us came in 95 when we imported indigenous technology in terms of molds, machines, automation, and other technical know-how. This led to the product quality getting significant improvement and widespread acceptance compared to the first few years of struggle. Building on this momentum, we started our first state-of-the-art manufacturing plant in 2002. Manufacture certified bottles and carboys. Now, this was not only the first manufacturer in India, but one of the few to do so in the world. This gave us instant recognition, boosted our brand image. We were looked at as a serious threat to the global multinational dominance across 5 to 6 decades in India. Strength of this and the overwhelming feedback led to another facility in 2006 for molecular biology consumables, fully automated facility. 2007 led us to the international business completely by default. 2012, we set up another manufacturing facility to cater to growing demands both internationally and domestically. In 2018, Clear Vision Holdings, which is our current private equity partner, ADV Partners, made a significant minority investment in the company, the first by somebody outside the family. And as we stand in 2021, we've acquired 5 acres of land in Panchla, again, a district in West Bengal, where we have started the construction. Construction is underway since the last 3 months to develop a state-of-the-art manufacturing facility, pure manufacturing facility. And we've acquired another 6 acres of land, where construction is yet to begin, which starts next month, which is going to be a state-of-the-art distribution and fulfillment center for customers across the globe, and India's first radiation plant, the first by a labware manufacturer completely for its captive consumption. Next slide, please. These are some of the key products in the consumable segment. As you can see, there goes, may look like simple pieces of plastic, goes a great deal of engineering to build the perfect product, to ensure that there's a flash-free orifice, a well-engineered cone which fits a multitude of pipetters, or a well-engineered cap to ensure that there is no leakage, not for standard liquids, but harsh reagents and solvents at a variety of pressures and temperatures. It could go as high as 196 degrees C in terms of cold temperatures, or 80 degrees C in terms of hot temperatures, and it must maintain the leak proofness. To put it simply, it could be a very inexpensive piece of plastic holding a very, very expensive chemical or reagent, which makes the quality of the plastic all the more critical and makes the product all the more sticky. Next slide, please. In reusables, our marquee products are certified range of bottles, carboys, beakers, and cylinders. As I said, this put us into instant recognition with our first state-of-the-art facility. We are one of the few manufacturers globally, and probably the only in India to have this range of product line. And this has opened doors for us all over the world and continues to be one of our strong selling products. In benchtop equipment, it's a product filler. It's more like adding, so that once the customer gets a one-stop solution, that they buy products from Tarsons. Next slide, please. Slide, please. This is the overview of how the global and the Indian market is poised in 2020 and how it's slated to grow over the next 5 years. We expect positive growth momentum both in India and globally, because the world has gone through unprecedented times where the world was taken by surprise in its healthcare infrastructure. We were not prepared as a globe as well as a country to handle a pandemic of such magnitude. So investment is poured all over the world, as specifically in India as well, through the public and private sectors. And such boosts in healthcare infrastructure directly benefit companies like us, which are at the forefront of supplying such sectors. A number of international pharmaceutical companies have been outsourcing their R&D activities and clinical trials to CROs in India. CROs being an important customer of a company like ours, we stand to directly benefit from the same. So an overall positive, sentiment on the healthcare testing research segments gives Tarsons a very, very strong positioning and footing moving forward over the next 3 to 5 years. Next slide, please. This slide talks about the entire global revenue of lab plastics divided among key customer segments. An important point to notice out here is the purple shaded slide on the left, which is 41% PCR and cell and tissue culture is currently something what we don't do. So technically our revenues come from 59% of the global plastic labware market. Adding these 41% product lines of PCR and cell and tissue culture put us in a very formidable position, not only in India as well as internationally. PCR is currently planned in our existing facilities and cell and tissue culture in the new upcoming facility. For end-use customers, we have a strong and growing presence across all customer segments in India as well as internationally. Next slide, please. This slide talks about the rapid shift from glassware to plasticware. I wouldn't completely agree with this point. Glass is very strong in certain industries, such as chemical industries, where high degree of heating and harsh solvents are required. And I believe glass will continue to remain strong in such industries, and they would not be able to replace it by plastic. Plastic is very strong in industries such as biotech, biopharma, testing, research, healthcare, where you require products to be molded to very fine tolerances, having wall thicknesses of lower than 0.15 mm, and have billions of parts produced with purity conditions such as DNase, RNase, endotoxin free. In such places, glass will not be able to replace plastic. So the only positive for the plasticware industry is that these industries are growing at a much rapid pace compared to industries where glass is prevalent. Hence, these industries should form a majority part of the overall scientific ware market, hence giving extra market share or a dominant market share to plastic over glass. Next slide, please. This shows how the various product categories which we are today present in the first two boxes of how they are moving in the next 5 years, and very important, the new product like PCR cell culture and how it's slated to move over the next 5-year period. Next slide, please. Next slide, please. So the key strengths of the company, I believe the single biggest strength of the company is its brand equity, brand image that it has in the minds of the Indian scientific research community. I could go as far as to say that laboratory plasticware in India is synonymous or spelled as Tarsons. There are various manufacturers manufacturing good quality products, but what sets us apart from most of our competition domestically is quality products consistently and reliably over decades. Most manufacturers fail over long periods of time, and this is where we've been able to score and have a very, very strong brand which the scientific research community of India trusts, and which puts us in a very elite group of select brands all over the world. And all this strength is attributed to our people who have supported us throughout and ensured that every vertical, every corner, and every area of the company is well covered. Next slide, please. We also believe that our strong distribution network of about 141 distributors have played a critical role in ensuring that we have one of the strongest and highest penetrated reach in the country in comparison to multinational players as well as domestic competition. And various sub-brands like Spinwin, Cryochill, MaxiAmp, MaxiPens have become so popular in India that they're almost synonymous to the product categories they represent in the Indian scientific research community. Next slide, please. This slide talks about the revenue distribution between the three segments. We expect consumables to go up from the 61.5% because most of our existing product capacity expansions and new products are centered around consumables. Reusables might drop in percentage, but in volumes will continue to grow robustly, with bottles, carboys occupying a large portion of the business in the biotech, biopharma space. Others is currently not our focus as described earlier. We could probably look into it in the next 3 to 5 year period. Next slide, please. This slide shows our new facility and the magnitude of this facility. As you can see, 21,550 square meters, bigger than anything put together, what we've had since inception, which puts us in a very formidable position for future growth spread over the next 3 to 5 years. All our facilities with consumables are fully automated using state-of-the-art robotics, right from material insertion to final product before packaging, manufactured in aseptic areas or certified class ISO 7 and class ISO 8 clean rooms, which are third-party validated and not validated by internal quality systems. We have the necessary certification to conduct business both in India as well as internationally. Next slide, please. These are some of our customers spread across the domestic customer base. An important point to note out here is 100% of the business conducted in India, which is two-thirds of our business, goes through Tarsons brand only. And internationally, which is one-third of our brand, 60% goes through an ODM or white label channel and 40% goes through the Tarsons brand. So effectively, on a whole level basis, 80% of our revenue comes from our brand and 20% of our revenue comes from ODM or white label channels. Next slide, please. This shows on the right that today at 62% is our ODM for international business and 38% is our branded share for international business. This has grown very robustly from 99% ODM and 1% branded over a 10-year period, and it's slated to touch 50% each over the next 3 to 5 years. On the left, you will see the distribution reach and our distribution channel all over the country. Being a company from the East, we are quite, many people are of the belief that most of our revenue is centered in and around the eastern part of the country. Contrary to that belief, most of our revenue comes from the south and the west of the country, followed by the north and the east. This is because of the geographical concentration of biotech, biopharma research customers in these parts of the country and very little presence in the north and the east for these product lines. Next slide, please. So this is the financial slide, and I would request our CFO, Mr. Santosh Agarwal, to take you over the slide.
Yeah, good afternoon, everyone. So just a small summary of the financial slide. Company has grown across history with a CAGR of 14% since FY15 on the back of export growth of 20% and domestic growth of 12%. We have seen increase in sales over the year on the back of increase in demand of consumables. The company is highly focused to maintain the gross margin of more than 73%. In FY21, we have reported gross margin of 73%, which actually translates this into EBITDA margin of 46%, PBT margin of 39%, PAT margin of 29%, ROCE of 34%, average ROE of 31%. Company has delivered this kind of robust performance on the back of efficient use of raw materials, reduced scraps, higher automation, leverage on operating and distribution overheads. Company is very much hopeful to continue this kind of momentum in future on the back of increase in sales of sterilized product sales and highly value-added product sales. For example, in Q1 FY22, if we compare Q1 FY22 number with FY21 number, then we can observe that the gross margin has been increased by more than 800 basis points. EBITDA has been increased by more than 600 basis points. PAT increased by more than 500 basis points. ROC increased by more than 300 basis points. Average ROE has been increased by more than 700 basis points. So this gives us confidence that we can continue this kind of growth in future as well. Next slide, please.
So I would like to introduce ourselves since we didn't do it in the first slide. So Sanjeev Sehgal, as I told you, he's the founder, chairman, and managing director of the company. Been with the company since inception and today looks after new projects in manufacturing and new developments in the company. I'm Rohan Sehgal, been with the company since 2010. Did my education in Calcutta and then did a degree in finance and accounting from the UK. Today I look after sales, marketing, and business development activities of the company. And we have with us Mr. Santosh Agarwal, who's the chief financial officer of the company, has 20 years of rich experience, been with us for 2 years. Prior to that, was the CFO of a European MNC in India. On the board, I have myself and Sanjeev, along with Gaurav, director from the investment arm of ADV Partners, and we have a very robust and strong independent director board, starting with Girish Vanwari, very strong name in tax, today founded Transaction Square a couple of years ago, and has been a prominent name heading tax at a big four company for the longest period before Transaction Square. Sucharita Basu, very strong and prominent name in law all across the country, was an ex-partner of a big law firm in the country before she co-founded Aquilaw. And Viresh Oberoi, very, very strong name from Tata, spent most of his career with Tata, co-founded M Junction, which was an initiative with Tata. Today, a very strong member of the CII circles. PricewaterhouseCoopers has been our statutory auditor for the last 3 years. And this year, we have appointed Grant Thornton as our internal auditor. Next slide, please. This is so these are the key business strategies of the company moving forward to achieve a robust growth. We believe strengthening our existing product portfolios. There are certain product portfolios what we have currently where we do not have enough capacity to meet demands. growing these demands in these existing product portfolios will help us gain deeper market share in India, as well as increase our presence in more countries internationally, as well as supply a larger range of products internationally and increase our revenue. Having new product lines such as PCR and cell culture puts us in a formidable position because we already have leveraged our strong brand and will use the same distribution network and as supply to the same customers. It's all about building these product lines at the right quality levels to ensure a much larger pie and much larger market share with these existing customers and increase our market share significantly in India. Increase our presence in international markets. Now we do business internationally through a two-pronged approach. One is the private labeled ODM in select countries of Western Europe and US and Canada. Here we continue, we have built our reputation as a supplier for the last 10 to 12 years. Now is the time, the inflection point to go to the next level by adding new products, increasing our wallet share, and also capitalize on the China plus one strategy, which is gaining great importance because of ease of doing business with India and the right duty structures of importing products from India puts us in a very, very strong position once again. And in the branded countries, to grow from 35 countries to about 80 to 100 countries over the next 5 to 7 years will put us in another strong position in the branded side in the international business. We believe we have a strong balance sheet with formidable numbers and strong profitability, but taking advantage of economies of scale further as we grow our size and scale of the company in the next 3 to 5 years will help us develop better returns to our stakeholders, and we already have. Next slide, please. Next slide, please. So this is the key points in a nutshell, what we have discussed in today's presentation. Once again, we thank you for your time today and thank you so much.
Thank you so much, sir. We'll now open the floor for the Q&A session. While we have already received some questions and will be taking those questions first, a gentle reminder to all to kindly post your respective questions in the Q&A panel available, and we will try our best to ensure that all questions are answered. Coming to the first question, could you tell us what is the unique selling proposition for Tarsons, especially in the context of the unorganized and comparatively smaller players?
So the unorganized segment is a very, very small portion of the market. I believe that it would be less than 10% of the market. Our main competing points are with established domestic manufacturers and brands and multinational companies. And our unique selling point would be having the right products, quality products, having very, very strong customer relationships, having a very, very strong brand, and the biggest of all, having consistent, reliable quality, which most brands fail to achieve in the country.
Thank you, sir. So, given the leadership position in our segment, we see a growth rate of 8 to 9% since FY17. If you could throw some light on that. Also, if you could share any outlook given the huge expansion that is planned.
Sure. So 8 to 9% is because of one fiscal year in the middle where growth was limited, where we did not grow. But overall, if you see from a 5-year period, we've grown at a 14% CAGR. Over a 10-year period, we've grown close to an 18% CAGR. So there's been healthy growth, but the market has been expanding. And we see the market really opening up and a lot of emphasis on healthcare testing research, not only in India, but all over the world. And as I said earlier, we stand to be at the forefront of benefiting from this research in India, as well as a growing presence internationally. For the expansion which is planned, we will use the proceeds, about 65 odd crores from our proceeds in the IPO to fund our CapEx plans, to fund our construction plans and our new facility, and the rest of the CapEx plan will be taken care by our internal accruals from our internal profitability over the next 2 to 3 years.
So, could you throw some light on what the promoter holding would be post the IPO?
I have not done an identical calculation, but at the moment we stand at 50.75%. The IPO post issue will be somewhere between 47 to 47.5%. There's a significant, there's a very, very non-significant drop because of a natural dilution on raising IPO proceeds and a very, very negligible offer for sale by the promoters.
Thank you. So which segment from your products do you expect to have to see the highest growth, and the reasons for that?
Sure. So we believe that there's a tremendous, growth in the pharma space. India is turning out to be the biggest global pharma hub, and there's a lot of growth in that sector. India, I believe, is going to be the next big thing when it comes to research, because we are not up there with various other developed countries in terms of research budgets, but we believe that a lot of focus is being put on the research budgets in the country. So research and innovation would play a major role in India. Because of the pandemic, a lot of emphasis has been given on health. So we believe that the healthcare, the testing, the diagnostic hospital side would also experience a massive growth. So overall, there is such a positive momentum all across different verticals of the industry. It's very difficult as a company to pinpoint on one side. We are prepared to, because our products are common all across these verticals, we are preparing ourselves for very, very robust growth in the industry, and we want to be at the forefront to take advantage of such growth levels.
Thank you, sir. Sir, could you throw some light on the current market share that we have in India and also the last 5 years CAGR growth?
Last 5 years CAGR growth in India, I do not have the identical, but as a company, we are at 14%. I don't have it at the back of my head. What is India only? And what was the next part of the question? Could you just repeat that, please?
Regarding the market share that we have in India.
Indian market today is 12 billion rupees, out of which Tarsons is 1.5 billion rupees. And that is 1.5 billion on 12 billion for the overall market. But the participating market of Tarsons is about 6 to 6.5 billion rupees, and we are 1.5 billion out of that. So that puts us around 23 to 25% of market share in our participating market. Today, 41% of the market, or 41% of 12 billion, comes from cell culture and PCR technologies, something which we are currently under development. And we have already successfully launched a few areas of PCR over the last few months, and we plan to launch the next few areas of PCR over the next few months in this fiscal year. And cell culture will be developed over the next 2.5 years, which gives us complete access to 100% of the market.
Thank you, sir. So we see a majority of our revenues coming from South and West India. Could you throw some light on the business plans in the other parts of the country, as well as if we are planning on setting up any manufacturing facilities in the southern and western regions?
So the good part about Tarsons is as a market share, we are quite constant all across the country. Unfortunately, certain areas of the country have a higher geographical concentration of certain customers. So unless more biotech, biopharma centers open up in north and east part of India, south and west will continue to lead the way because of higher geographical presence of customers. So in terms of market share, we are very, very strong in east and north, but we are supporting the amount of customers that are there. So in whole number figures, it is very difficult for east and north to match south and west unless the infrastructure in these parts of the country grow at the level it is grown in south and west.
Thank you, sir. You're doing a significant capex. Can you explain the rationale and the benefits of that?
The benefits and the rationale for the capex is we are building up a product line which is PCR and cell culture technologies. There's been accelerated growth not only in India but internationally. This has always been in our radar, but considering dependency not only on India as well as 40 countries all over the world, and us growing our company size to where it is today, puts us in a very comfortable position to undertake this capex for the PCR and cell culture technologies over the next few years. Probably a few years ago, the company size was smaller and the markets in India were also smaller, and we were limited to just the Indian market and not the international markets probably 10 years back. So growth in the international markets, dependency on not one country and various countries, gives us the confidence to move into these two product lines for which we have the technology, and we're very, very confident of very, very strong growth.
Thank you, sir. So could you throw some light on what would be the price differential between your products and an MNC like Thermo Fisher, and what differentiates you from them?
It's about 15 to 20% on an average. In some cases, it could come very, very low or close by. In some cases, it could go higher. But what differentiates us is We are probably the most preferred choice for laboratory plasticware in India because of combination of customer care, closeness to the customer in terms of delivering products on time, being a very very reliable product, not only in terms of quality but in terms of supply, and having a wide range of products always available for the customer. Many times multinationals may not have the same level of customer care what a smaller brand like Tarsons would have, and we capitalize on that along with our very very robust quality and performance. And this is how we've been able to gain market share from multinationals successfully over the last 2.5 decades.
Thank you, sir. So the next question is, would your working capital management improve further going ahead? The current receivable days is 74 days in FY21. Do you see any further reduction in that?
I would ask our CFO, Mr. Santosh Agarwal, to answer this question.
Sure. Currently, our working capital cycle is 135 days on FY21. Now we get it down to 120 to 122 days in Q1 FY22. We have done a lot of brainstorming in the inventory part and the receivable part. Currently, domestic receivables are coming in 45 to 65 days, and export receivables are coming in the range of 45 to 90 days because of the transit time. So we have done a lot of brainstorming in the used 190 to 192 days. We get it down to 122 days. And apart from that, from the payable side, we need to pay upfront cash in advance to import the raw materials from Europe and Singapore kind of country, right? So these raw materials are coming from the Fortune 500 companies, and we need to pay upfront cash. So we don't see much improvement in this side considering our scale. But in future, if we scale, can demand the credit period from this supplier. So in the short term, we expect the working capital cycle in the range of 135 to 145 days, although we have done the improvement till 122 days, but we, on a conservative side, we prefer that we think that the working capital cycle will range from 135 to 145 days in the short run, but in the long run, we can do the improvement further.
So just to add to Santosh, what I believe is that our country, as India, does not manufacture specialized grades for medical applications of raw material. We are reliant on other countries for import, and we have to pay in advance in cash, which is the industry norm, and nothing which is related only to Tarsons. And we cannot have local sourcing, which other countries like Europe and US have. The working capital cycle remain elongated because you're accounting for 50, 60 days of shipment and paying in advance in cash.
And one more thing to add, if you compare our working capital cycle with the other industry peers, we are way ahead. In compared to other industry peers, they have a working capital cycle in the range of 200 to 280 days, but currently we are reporting 120 to 122 days.
And this is for like companies. Yeah, because of course the Thermo Fisher Scientifics of the world in the US have a lower working capital cycle because they source raw materials from their own country, which delivers in 4 to 5 days, as compared to ours, 50 to 60 days. Thank you.
Thank you, sir. So, there are a couple of questions with regards to the competition, so I'll just club them together. Could you throw some light on who are the prominent global competitors to you?
Sure.
And also, if you could reiterate the opportunity size for the market, and what is your market in India?
Sure. So the premium, competition globally in India, it is Thermo, it is Corning, it is Eppendorf. These three are major competitors, but globally there is a strong presence of other family-owned German companies like Greiner, like Saarstedt, and various family-owned US companies as well, which are not so prevalent in the Indian marketplace. But globally, we compete with them. The market share for us, as I explained, is 25% on our addressable market today, but on the whole market, we are about 12 to 13%, slated to grow to a larger share as we have the whole market under our radar. And was there any question which I'm missing out as well? Okay, the growth size of the industry internationally, I think internationally we don't have a meaningful market in terms of percentage, but we have a meaningful business in terms of whole numbers. We are 1/3 of our revenue comes from international business, but the international business today is about 50,000 crores. So at 75, 80 crores or 50,000 crores doesn't put a meaningful market share in terms of calculation. But for us, 0 to 80 crores has been a great journey over the last 10 years, and we expect to grow this robustly over the next 5-10 years as well.
Thank you, sir. The next question is, what are the key raw materials used during manufacturing? And are we facing any challenges from an increase in the price of raw materials, especially of plastic?
Sure. The key raw materials used are polypropylene, polyethylene, and polystyrene. These are specialized grades for medical use. They are not commodity grades and already available at a huge premium to commodity grades. So they are not crude oil based. They are more on a demand and supply base. And generally, the raw materials are very stable, and we maintain our pricing on a financial year and don't change in the middle of the year unless a one-off year like the last year where shipping costs globally have gone to another level, and the huge demand and healthcare all across the world has led to supply demand being more than supply. So pricing of raw materials have risen, but the price rise is not normal and hence has to be passed on to the customer, which most of the industry, including Tarsons, has done.
Thank you, sir. So the next questions, do you plan to be debt-free post the IPO?
Absolutely. So a significant portion of this proceeds is being used to repay the debt back. So at the post-listing, we would have zero negligible debt.
Thank you, sir. So could you also talk more about the new facility planned in Panchla and what kind of products and peak revenues we can make from that facility?
So in terms of revenue, at this moment, we are putting in an investment of whatever is mentioned in the DRHP on the infrastructure and building up of that facility. Generally, we will expect revenues to the tune of the gross fixed asset turnover we currently have. And it should go in the same trend of about 0.85 to 0.90 levels. And in the new facility, we can expect new product lines like cell culture, as well as capacity expansions of certain key product lines such as cryogenics, centrifuge and liquid handling.
Thank you, sir. So if you would also throw some light on the current capacity utilization.
So we have around 60 to 65 machines spread across different technologies and about 600 to 700 molds along with automation systems. We are not a one product company. For example, we're not a manufacturer of two-wheelers or four-wheelers where we can identify that we can manufacture these many number of units per month. It's such a complicated permutation and combination of 1700 SKUs spread over 65 machines, spread over 700 molds. To reach a very correct capacity is next to impossible. It can vary from year to year. For example, I could sell 1 billion units this year and have a revenue of 2.4 billion rupees. And next year I could sell 0.8 billion units and have a revenue of 3 billion rupees. So I could reduce my SKU output I could reduce my output from 1 billion to 0.8 billion, but my revenue could increase from 2.4 billion to 3 billion because our products range from 25 paisa in cost to 15,000 rupees. So such a large variation with such complicated manufacturing leads to no one right answer as to what is our capacity.
Thank you, sir. So we see that Tarsons enjoys good margins. Are these in line with global and domestic peers? And are these margins sustainable in the medium term? Or has the COVID scenario been positive or negative on this?
So compared to global peers, I would say they are lower than us, but the range at which they are, for example, one of the biggest global players might have $32 billion in revenue with 32% EBITDA, at those levels, having manufacturing facilities across 25 countries, having more than 250,000 people work for them and having subsidiaries in more than 60 countries to achieve that sort of an EBITDA is truly phenomenal. And we believe that based on our scale, being present only in one state of the country and operating from here to the rest of the country and all over the world justifies our margin level as compared to much larger scales of these MNCs. But in terms of domestic manufacturing, we enjoy much superior margin to our domestic to domestic competitors because of our superior know-how in terms of technology, superior know-how in terms of manufacturing techniques, practices, lean manufacturing techniques, and a lot of know-how in terms of productivity and output, which puts us at a much more superior position to our domestic competition. We believe we are much ahead of them in terms of know-how and technology, and that's what sets us apart as well.
Thank you, sir. Would we be coming up with any products in the PCR and cell culture segment?
Yes, we will be coming up with PCR. In fact, a few lines of PCR have already been developed and begun to commercialize over these quarters in FY22. And new product lines are supposed to be slated to enter in Q3, Q4 of FY22. Cell culture requires much larger space. We do not have the infrastructure. Infrastructure is being currently developed in the new facility and it will be launched out there.
Thank you, sir. The next question is there any customer lock-in or switching costs for a customer, or a typical customer can change a vendor anytime without any issues? How does that work?
See, there is no lock-in in terms of contracts, but you can find a customer who is undertaking using tubes or pipette tips from brand X, which is his preferred brand, and he's conducting research which costs him thousands of times of the cost of purchasing the plastic and costs him and his team time, which could spread over a year, 6 months, 2 years. And for saving 10% or 15% cost, he might move to another brand, which could spoil his research and cause damage in terms of time as well as resources, as well as costs to an extent far greater than cheaper plastics. So eventually this industry is very sticky and prefers to rely on brands which they can trust on. Fortunately, Tarsons falls at the top line of these brands in the country.
Thank you, sir. Sir, could you throw some light on the split between plasticware and glassware products?
Currently, it's almost equal. In India, we believe internationally it's a much greater share to plasticware. And we expect it to grow significantly over the next 4 to 5 years and reach somewhere close to 2/3, 1/3 or higher in favor of plastics.
Thank you so much. Sir, could you also please comment on the geographical and political risks associated with all facilities of the company being situated in one region?
So in terms of geographical risks, we don't see any risks. We see a lot of advantages because most of our people, technology and know-how lies in this part of the country. We have tightly knit company, spent a lot of time developing this know-how to achieve this leadership position, and we don't want to dilute it by having facilities spread all across the country. However, as we grow in scale and size, if we need to expand and have a facility of similar products and scale up and have identical facilities to what we have in Calcutta, we may look at other geographical regions. But considering our very negligible freight costs all across the country, we have been able to ensure that business is conducted very, very profitably and very reliably all over the country, having a very robust network of distribution partners who have ensured that Tarsons stock is available at any point of time for all its key critical customers, medium, small or large, whenever they need it.
Thank you, sir. How strong is the market recall for Tarsons as a brand, and how much a role will it play in the success of Tarsons going forward?
I think the strong recall of the Tarsons brand is evident or prevalent from what we have been able to achieve. Over the last 2.5 decades, we've practically come into a no-entry zone, which was dominated by multinationals, and there was no place for Indian manufacturers. There were only French players in India, and we showed the way of how you can come into this market and compete with multinational players. So this entire journey speaks for the strong brand recall of Tarsons, and we expect to continue this growth moving forward, not only in India, but also keep establishing our strong and growing presence internationally as well.
In the hospital sector, do you see yourself competing with the likes of Poly Medicure?
No, we don't see ourselves competing with the likes of Polymedicure, because companies like Polymedicure are more into IVF cannulas or products related to the patient directly. It could be blood collection tubes, it could be syringes, it could be IVF cannulas. We are more related to the research part. So once the patient has been injected with a syringe and his blood is taken in a blood collection tube to the laboratory to test whether he's got a particular problem which he's been tested for, it is in that laboratory of the hospital that our plastics are used.
Thank you, sir. So the next question is with regards to the EBITDA margin. It says that the EBITDA margin is currently 53% as of Q1 FY22.
Right.
How do you see that going forward?
We believe that the EBITDA margins are fairly sustainable on the on the full year FY21 and Q1 FY22. In that region of somewhere in the 50% range is very, very sustainable moving ahead.
Thank you, sir. So we have a couple of questions with regards to the price of the issue. So I would request if someone to take up that question.
So I would request one of the bankers to take that up on our behalf, please.
Yeah, hi. So I think there's been a question around the pricing of the issue. So see, one, as a rule, we are not allowed to make any forward-looking statements. But I think pricing is, we followed the standard procedure of, going out, meeting with investors, doing extensive marketing, and whatever price band you currently see is the result of that, where book building, this has been based on some serious feedback that has come from all investors, and that's how you see the price band. So this is basis their feedback, based on their understanding of the company and how they see the growth outlook. So that is one data point that I wanted to share. And two is I also want to again just stress upon the high margins that the company makes, as well as the high return ratios that the company's been reflecting over the years. And compare that to some of the, there is no real immediate peer which is comparable in India, from a pure comparison point of view. And therefore there is, we can't really give a peer set. Even our DRHP doesn't have any peer set mentioned for that reason. But pricing is based on, feedback. And if I, look at, again, what is given is only historical numbers. We have to, factor in the growth that the company will kind of see. And that is, I think, what the investors are kind of factored in. If any of the other banks would like to add, Deepak or Samit.
Like Satyan mentioned, pricing has been decided post running exhaustive roadshows, as is the norm in Indian IPOs. Thank you.
And just to add, there has been a very, very good feedback which we have received from all the marquee, both global and domestic investors, and which will be reflected very soon on Friday once you look at the anchor. So, just to add to that. So it's basically based on the detailed feedback, based on 100 plus meetings of institutional investors, both domestic and global. And they have definitely perceived Tarsons as a very unique branded play on the diagnostics and healthcare, and the kind of growth opportunity tremendous opportunity which the sector offers, and also the current growth rates, and going forward the recent performance has also been factored in. So I hope all cumulatively will give you a sense on where the pricing is. Thank you.
Thank you so much, sir. Coming to the next question, could you throw some light on how much did COVID benefit you in the FY21?
So while we don't sell our products directly to the end customer, we sell through distribution. We don't have an accurate number, but we believe about 20% of the revenues came directly from COVID benefits during the COVID periods of lockdown 1 and 2. an important point to notice out here or note out here is that the amount of revenue we lost from customers such as academia, research, pharma, CROs, and biotech because of partial or complete close down of these customers during the COVID period, which would be equal or exceed the.
Thank you, sir. Sir, could you throw some light on who influences the buying decision of which brand to use? Will it be the doctor, the researcher, or the hospital, or the company? Who exactly is your customer?
Mainly, it's the user. While it's routed through commercial channels, through purchase orders, but the user always has the final say.
Thank you, sir. And sir, are there any intentions to increase the opportunity size by entering adjacency outside labware?
We have a huge, huge forecast for expansion spread across multiple years beyond the 3 to 5 year period, and this is what we know how to do the best, and we would like to leverage our strength moving forward. And at this point, we do not find any bandwidth to look beyond the plastic labware space. I feel there's an ocean of growth awaiting us over the next few years.
Thank you, sir. So what will be the asset turn from upcoming facilities, and when will they come on stream? Also, if you could throw some light on your credit period average.
Asset turns would be similar to our current asset turns of 0.85 to 0.90 times. It would take about 2 years for the facility to come under commercial use. And on our credit periods, we have about 45 to 55 days approx average credit lines from our domestic buyers and about 65 to 90 days credit lines from our international buyers. The reason for the higher credit lines is the cost is the time of shipment.
Thank you, sir. So we'll be taking the last couple of questions for this evening session. The next question reads from medium to long term, 3 to 5 years perspective. What is the capacity growth that you can envisage, and any large capex that needs to be funded?
No, I think it's very difficult, as I said, to envisage capacity right in the beginning of the call because of the complexity of the operations, what we are currently having. All I can say is that we are building up infrastructure for very, very large growth in terms of product lines for the future, in terms of this new facility, and we believe our internal accruals are sufficient to fund the same through the next few years.
Thank you, sir. Coming to the last question, what is the technology and certification requirement for your manufacturing process? If you could throw some light on that, please.
Certification requirement is as such the standard ISO 9001, which is the management certification requirement, and ISO 13485, which is the medical grade certification requirement, both of which we have. Technology requirements are very, very complicated and diverse and spread differently from products. We have 1700 SKUs, and that's what makes things more and more complicated because no two products are alike, no two products are the same. I don't mean in the 1700 SKUs, but I mean in the 300 product groups what we have. And different products have their different challenges, different technology requirements. And for us to be able to master 80% of the products at a very, very high or top level and 20% products at a very, very good level puts us at a very, very strong position. And this is what is one of the key areas which differentiates us from the rest.
Thank you, sir. So we were taking one last question. If you could throw some light on any specifics on the huge PAT growth in March of FY21.
Sure. Can you just repeat the question, please?
So if you could throw some light on any specifics on the huge PAT growth in the March of 21.
March of 21. See, in FY20, we reported a PAT of 22.5%. In FY21, we reported a PAT of 29.4%. This PAT has been increased because of increase in the EBITDA, and the increase in the increase in percentage of sales was more in compared to the increase in the percentage of expenses. So we have a leverage on the distribution and overhead expenses. That's the reason this has been reflected in the PAT. Apart from that, we also reduced the interest cost also, right? That is also reflected in the PAT.
Thank you so much, sir. With that, we come to the end of the Q&A session for this evening. I would now like to invite Mr. Sambit Dutt from SBI Capital Markets Limited to give the vote of thanks. Over to you, sir.
Thank you. On behalf of Tarsons Products Limited, I express my sincere gratitude to you for attending the analyst meet of the company. I would like to remind you that the company proposes to open its bid offer on Monday, November 15, 2021, with an initial public offering of equity shares of face value ₹2, each aggregating to ₹1,023 crores. The price band is fixed from ₹635 to ₹662 per equity share. The bid offer is on Wednesday, November 21 bidders. The minimum bid lot is 22 equities and in multiples of 20 equities thereafter. We request your overwhelming support for this issue. On behalf of the company,
Thank you so much. I would like to thank everyone for joining the virtual brokers and analyst meet of Tarsons Products Limited for their forthcoming public issue. Please feel free to reach out to us for any further queries. You could email us at tarsons@adfactorspr.com, and we'll definitely do our best to revert to all your queries within 48 hours. We look forward to your support in making this IPO a grand success. Thank you all once again. Take care and stay safe. Thank you.
Thank you, everyone.
Thank you.
Thank you, everyone.